Hi guys, a very good evening to all of y'all. Uh, well, before we start off, today's session would be a very short session, right? The reason is we will only be looking into a pre-populated sheet, but this time the pre-populated sheet is about your group consolidated cash flows, right? I guess this was discussed in your September, December 2020. Okay. So I guess that is one of the requirement we are left off with because the remaining requirements were covered in your previous session, right? So we are left off with a 12 mark requirement, which is a pre-populated sheet in relation to your statement of group cash flows, right? So without further delay, let us directly jump into our requirement where the examiner only wants us to use exhibit 1, 2, and 3 only to finalize this cash flow, right? Uh, Let me see. There are altogether four requirements, guys. There are altogether four exhibits, but examiner only wants us to use 1, 2, and 3 to finalize our pre-populated sheet, right? And also for the people who are doing for your very first time a pre-populated sheet is simple, guys. It's something like it's incomplete. It's partially complete, I would say, right? Because the reason would have been some might be errors, some inexperience of the accountant, some might be he would have forgotten to include some items. You all as a CFO, you all as SBR students, you all need to finalize that. If you all finalize that, you all will get 12 marks, right? And I request from all of y'all, right? I hope that you are practicing all of this on your ACCA platforms. The reason is it will give you all a real-time experience as well as it will save time because you all can simply copy and paste. Okay. Okay. So don't expect me to read your very first exhibit. The reason is because we have already previously completed that. For the people who have watched, well, you all will be in safe hands. For the people who have not watched, you all can pause this recording, right? Go and watch that and come and do this adjustment. Okay? Okay. So let me read. Uh Group consulted. Sorry. I forgot to mention something else. Extreme sorry. This is your draft, right? This is the draft. And also they have given in addition your statement of financial position, which is consolidated as well as your profit or loss, right? They have given all of this. So I believe that you all need to add or deduct or you all need to complete this draft statement of cash flows. That is what you all need to do. Okay. To do that, we have to go and read exhibit 1, 2, and 3, which I will only be reading 2 and 3 for you all. Okay. The group consolidated financial statements have been correctly completed by the financial accountant. Okay, so that means this data is 100% correct, right? SOFP and SOPL, right? But the exemption, except for your statement of cash flows. Okay, the reason is he has drafted your cash flows but has not yet taken into account. Okay, can you see the reason why it's not 100% complete? Because he has forgotten, sorry, my bad, he has forgotten to take the additional 30%. Right? Additional 30% when acquiring Flaco. Hopefully, I'll remember in Exhibit 1, right? Flaco was a step up acquisition. You initially had 40%, after you bought in 30%, right? Which made you all a total of 70% of shareholding, right? And that you all purchased through cash. That particular part, your financial accountant of this company has not included. Okay. As well as they have bought some asset acquisitions. They have done some asset purchases, which was not mentioned. Also, there were some share issues. Obviously, you don't know, right? When you issue shares, you can get some cash. These were not included. That is what I'm simply mentioning here. All of these three adjustments were not included. And also there are some errors, right? So you all as CFO, what you all need to do is you all need to correct, your financial accountant's mistakes. Right? That then only you can finalize it and submit to your relevant shareholders. Okay, why did it suddenly change to green? I was using yellow, right? Let me use blue. Okay. Now I'm reading my third exhibit, right? Flaco was correctly consolidated on 1st July, right? Okay, that's no problem. That also gives us a validity and assurance that our July balances are correct, right? Sugar Group also purchased previously some assets. Okay, okay. Now, our very first para, guys, is related to intangible assets, right? It's related to intangible assets. What are they saying? What are they saying? They have already given us an opening balance of an intangible, a closing balance of an intangible of our group, right? Of our group. Okay, they have given opening and closing. So I believe that we need to do something, or we need to find something from that opening or closing, right? There were no disposals, right, or impairments. So that means there is no reduction or no credit entries in terms of your intangible, right, during the year. But amortization of 3.5 million. So there is an amortization which would reduce your intangible asset, has been deducted from your profit from operations. Okay. So using these given figures, right, opening balance, amortization, zero disposal, zero impairment, you all need to find something. Can you all tell me what you all need to find? Or let's look into when we are doing that calculation. Okay. But I do have a question to you all. I do have a question to you all. Now, there are some students, right? One or two of you all, right? You all might be thinking that this 3.5 million was deducted from our profits, right? From the group profits. So you all need to add it back. Why? Add it back under cash flow from operating activities. Okay. There might be one or two students who ask that. Okay. But I would ask from you all a simple question. Right. Again, I'm asking from you all a simple question. Has examiner given you all a heading in terms of operating activities? Has he given? No, right? He has only given you all investing activities and financing activities. So you all don't need to add anything, right? You all don't need to do anything in relation to operating activities. Just simply think operating activities was totally correct. You only need to look into investing and financing, right? These are for those one or two students who have that doubt. Okay. So okay, let us go and finish off intangible assets. Sorry, I forgot to remove off all of this. Let me do it freshly with you. So, but I need your help. Huh? I need your help. Opening balance was 15,865. 15,865. Closing balance was 33,456. Now, I'm not in a position to copy and paste. The reason is because I'm doing it on my Excel, right? Because actually, ACCA practice platform, it's a bit hectic, right? It gets stuck. You can't copy and paste. I don't know. They need to work on it somehow. 33,456, right? Open balances, closing balances. Okay. Now, also, do you all remember, right? When you all were purchasing Flaco also bought in some assets. Look at this. He's bringing intangible, he's bringing PPE, and he's bringing some cash, right? These also needs to be included. These also needs to be included under your intangible asset. Why? Because we are looking from a group perspective. From a group perspective, always you all need to include the parents and subsidiaries, assets and liabilities in whole, right? You all need to include assets and liabilities of parent as well as subsidiary in whole. How much is he bringing? He is bringing some license and patent which are intangible asset of 6781. 6781. Okay. Okay. Also, we need to remove 3,500 under amortization. I removed it off. Fine. And what am I left with? Okay. 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 Do you all remember? Do you all remember? Right? Goodwill. When we got that 70% after buying the 30%, we got a 70% total shareholding. There was a goodwill calculated. Goodwill is also part of your intangible assets. So that also needs to be included. Goodwill is also part of your intangible asset and that needs to be included. How much was the correctly calculated goodwill? 2259. Or let me link it up. Let me link it up. Let me link it up. The correct goodwill was 2259. Okay. Now, now let us see. According to our 100% corrective balance sheet, my closing balance of intangible should have been 33,456, right? But actually, I'm having, I had a opening balance, my subsidiary contributed some intangible assets, goodwill came in, and I had to reduce my amortization. So I have 21,405. Can you all see the difference? Can you all see? Can you see the major difference? What do you all think? Is it a disposal or is it a acquisition? You all would have purchased, right? That's what it's increasing from 21,405 to 33,456. So I would have gone and purchased for 12,051. This is the amount that I need to include. This is the amount that I need to include under working number 3 intangible asset. It is how much? It's an outflow, right? Because you all are purchasing. Since you all are purchasing, you all need to include 12,051. You all need to include 12,051. Okay, we are done with that. Okay, we are done with that. Okay. Now moving on. Right. For the people who don't understand this tabular method, you all can use T methods also, but T methods are going to cost you all time. Right? Time management is important in all your professional exams. So whatever the methods that you all prefer, you all can use. Okay. T method is not recommended, but if you all have any problems in understanding, well, it's up to you all. You all can use your T methods. Okay. But I would suggest you all to stick with your tabular method. Okay. Okay. Let me use another color. Now in terms of PPE, now in terms of PPE, the only addition during the year were from Flaco's acquisition, right? So that means there is no purchases. Only the addition would have been Flaco's. You see this 18076. Okay, okay. The group dispersed some of its PPE, right, which had a carrying amount of 6.37 million. They were sold at a loss of disposal of 2 million, right? They were sold at a loss of 2 million. Okay. Now see what the financial accountant has done. The financial accountant included the loss on disposal of 2 million as cash outflow under investing activities in the draft. Right? If you all want to visualize it, here see, rather than showing the cash proceeds, he has gone and shown your loss. Do you all think this is correct? He has gone and shown your loss on disposal. Right? Do you all think it's correct? Cash flows are always supposed to be something related to cash, right? Not your P&L items. So this is wrong. This 2 million is totally wrong, which he has included. That 2 million is totally wrong. What should have been the cash proceeds? What should have been the cash proceeds? I'm asking from you all. Sorry. Okay. The cash would have been obviously this is basic. This is basic. Your carrying amount is 6.37. He sold it for a loss. Right? 637 minus 2000. So how much you would have sold it? How much you would have received in cash? You would have received in cash 4370. 4370. But this fellow has shown as 2000, right? And that also as a loss, as an outflow. Cash proceeds, is it an outflow and inflow? It's supposed to be an inflow, so it's totally wrong. Okay, there are two ways of attempting it. One, you all can show the net impact, right? You all can show it like this. Let me keep this your final, right? How much do I need to show? I need to show plus 4370, right? What I could do is you all can show the net impact or you all can show it by step by step. It's totally up to you all. Whatever the approach that you all use, I am comfortable with it. Yeah. So give me a minute, guys. My lap is getting stuck here and there. So my final figure for intangible asset would be this one, right? As well as my final figure for profit from disposal would have been 4370. But just because I'm leaving this, do you think I will be able to get the entire 2 mark? Do you think I'll be able to get the entire 2 mark? Well, I would say no. You're not seeing complete. Look at this. Minus 2000 is equals to 4370. It's totally wrong, right? You all need to show. I'll of course show it in a breakup basis, right? First of all, I will correct the error, right? I will correct the error, right? I will correct the error, and then I will show the actual cash proceeds. Okay. Or there's another way also, guys. There's another way also. You can include plus 6340. Sorry, 6370. If you all include that, right? Let me show that also for you all. Let me show that also for you all. There are two ways. One you all can show breakup basis, or one you all can take net impact basis. 6370. Now see, 6370 minus 2000 would give you all plus 4370. Right? Any approach that you all choose is totally fine. For me, of course, I of course would choose the breakup basis. First of all, I would I'll correct my wrong, and after that, I will go and show 4370, which is the actual cash proceeds, right? So we are done with this as well. We are done with this as well. Okay. I of course felt this was totally easy. This was totally easy, except there was one part that was disturbing me, which is this. This is of course totally examiner's fault, guys. Not even examiners. This was Kaplan's fault, right? This was Kaplan's fault. I told you all, PP is increasing, right? PP is increasing from 52 to 55, right? Okay. And but they are telling there is only acquisition of flour, and apart from that, there is nothing coming inside, right? So that is still examiner has not given you all the relevant details, so you all don't need to look into your PP, right? You all don't need to look into a PP. For the people who want further clarification, all right, go and refer your old previous Kaplan exam kit that would have the actual figure. Or you can go and find out the actual past paper from your, what I would say, ACCA practice platform. And in that, you all will see a depreciation also included, right? So that I wanted to tell you all that as well, right? This compilation is a bit wrong. They have forgotten to include depreciation. They have forgotten to include. You can go and check the actual Sugar Co past paper, right? You all be able to see what I'm telling. Okay. Okay, so we are done with these two. What else we're left out with? Okay. Sugar Co purchased. Let me take another color. Sugar Co purchased 25% of equity interest in Butterco. For how much? 5 million. Right? Obviously, he's getting a significant influence because this is an associate. This is an associate. So since it's an investment, guys, since it's an investment, right? It's an investment. You all need to go and show that investment as an outflow, right? You all need to go and show it as an outflow, right? I would say that as an adjustment number four. How much? It's about minus 5,000. Minus 5,000. Simply copy. Done. Okay, we are done. Okay, we are done. That is the amount that we paid for butter. So we're done with three adjustments. That's about 6 marks in hand. 6 marks in hand. Now, now, okay. Butter Co. did not pay a dividend. Okay, that means the associate bugger, he did not pay you all a dividend. Sugar Co., who is the parent, also did not give any dividends. Okay, totally fine. You all don't give. But again, my question to you all is, have they told that subsidiary did not pay any dividends? Have they told? Have they told sub dividend? Have they told? No, right? So that means we need to find out whether how much was the dividend paid or received by the subsidiary. Sorry, you all will receive dividends from subsidiary, right? You all won't pay. Subsidiary will give you all dividends in addition to your profits. So you all need to go and find that. You all need to go and find that. Okay. You all need to go and find that. Before doing this, give me a minute. I wanted to tell you all something. We are left off with, yes, see, we're left off with one of these cash adjustments from exhibit number one. Okay. What is the exhibit number one? Can you all remember? Can you all remember? Look at this question number two. Can you all remember? We paid $3,000, right, as a cash consideration to acquire that 30% additional shares. But also, Flaco bought in some cash, so we only had to pay 1,766. This figure, I explained it in your previous recording. You all need, this is an outflow of cash. This is an outflow of cash. So you all need to include this as well in your calculation, right? You all need to include this as well in your calculation. How much would be outflow of cash? How much should it be? 1766. I would include a minus in front of it because it is a cash outflow. Why did I have that cash outflow? Because I had to buy subsidiary, right? Net cash paid for sub acquisition, right? Is why I included. Okay. So that is why examiner is telling. That is why examiner is telling look into exhibit number one, look into exhibit number two, look in exhibit number three. All of these have relevant information. Okay. So you all need to, uh, open up your eyes. Okay. So yeah, that is done. Now let's go to dividends. Let's go to dividends. Okay, let's go to dividends. So I'm done with working number two. I'm done with working number three. Right? Yeah. Okay. Now I need to calculate the amount that was given as dividends. The amount that was given as dividends. Guys, what I would say is, guys, don't rely on Kaplan itself because Kaplan, to be honest, right? When I was doing my exams, I used this, right? This is my entire Excel sheet of what I practiced. See, right? Don't worry, I'm not boasting off. This is the entire Excel sheet that I practiced when I was doing my own exams. So I want you all also to practice. But Kaplan guys, sometimes, here and there, when they are compiling the new editions, they omit some stuff. Because of that, there are some calculation errors that you all feel. Okay. So what I would say is when you all are practicing, do try to attempt all through your ACCA portal. Right? ACCA portal has the actual papers. You all can attempt through that. You all can attempt through that. Okay, now we need to find out how much was the dividends that I paid. Okay. How much was the dividends? This, of course, I will keep it as incomplete because it's not my mistake. It's the Kaplan bugger's mistake. He has not compiled it properly. You all can do it and see. And I don't want you to just get frustrated. It's not your mistake. It's Kaplan's mistake. Okay. So here, see, non-controlled interest. He's supposed to pay us dividends, right? Why you all get dividends? Because you all have invested. Okay, 12,914. Okay, closing balance is 30,152. So can you see something is increasing? Non-controlling interest would be under your equity, right? It would be under equity. So it's on a credit side of your SOFP. Okay. And they have already given us the profit attributable. Here, see, profit attributable to non-controlling interest was already calculated. So you all don't need to go and again recalculate. You all don't need to go and again recalculate the profit attributable. How much is it? 9162. 9162. Right? And do you all remember? Do you all remember? Do you all remember? We had to calculate. We bought in addition, right? We bought in Flaco. When we bought in Flaco, right? We had to calculate NCI, and we did. We found that. That also needs to be added. That also needs to be added because this opening balance, guys, is related to other investment, other non-current, non-controlling investments in different companies. This is related to FLACO. FLACO. This is related to FLACO. So how much do I need to include? How much do I need to include? Let me link it up again. FLACO's fair value of NCI was 11,400. 11,400. Okay. 11,400. Now I need to work it out. Okay. This now for the people, again, I'm telling you all, this balance brought forward is not related to FLA. Right. These are some other previous investments where you all hold NCI. Right. But this particular person is related to FLA because we had to calculate in our exhibit number 1 the fair value. Okay. Of NCI. Okay. This is not DB. Okay. So this plus this plus this. All of these are on your credit sides. All of these are on your credit sides. And your balance carried down is showing as 3152. Can you all see it's dropping? Can you all see it is dropping from 33 to 30? That means I guess you all have paid something. You all have paid, let us see. You all have paid something in terms of NCI, which would be 3324 was paid as dividends, right? Which was paid as dividends. That you all need to include in your calculations. That you all need to include in your calculations. Okay. That that you all need to show as dividends paid, right? Under dividends paid, how much? See, guys, I'm left. I don't I mean. Okay. That of course. Let me open another. Let me shift him here. Sorry. Let me shift him here. Okay. This I would mark as adjustment number 5. Adjustment number 5. Okay, how much would it be? 3324. I'm paying dividends in terms of NCI. Okay, that would be my final amount as well. That would be my final amount as well. Okay, guys, don't. I mean, keep it a bit what you call attractive. Now, my statement doesn't look attractive at all. Right, the reason is because I'm just doing it for the sake of doing it. Okay, but in exams, if you all have any additional times, just please try to make your statement looks even more presentable so that examiner gives you all marks. Okay. Now last adjustment is, guys, we are left off with last adjustment is okay, dividends also done. Last adjustment, you see. In addition to the shares issued to purchase Flaco, right? You see that 30% was not only financed through cash, it was also through a two share exchange, 1-for-2 share exchange, right? 1-for-2 share exchange. Okay, issued some ordinary shares for cash. Some ordinary shares for cash. So I guess we need to find this amount. The financial accountant was waiting for the confirmation of the value of share issue for cash, so included the nominal in the share draft. What he did, they have gone and issued some shares in return of cash. But since the financial accountant did not know how much at what rate per share was sold, he has just left it. He has just left it. Or he has only included 1,500. Now I need to check whether this is correct or not. I need to check whether it's correct or not. Okay, for that I need to work out share issue. I need to work out share issue. Okay. There are two ways, right? But the best way is combine ordinary share as well as share premium together. Guys, give me a minute. My system is getting stuck today. I don't know why. You see, opening balance of ordinary share capital as well as other components of equity is full of share premium. So what would be my opening shares, guys? What would be my opening shares? 20,000 plus 18,000, right? Which is simply my share capital as well as my share premium. Closing would be 3152, sorry, 23,000 plus 33,600. 23,000 plus 33,600. Okay. So you all can see, obviously, from 38 to 56, my balance has increased. That means I have issued some shares. That means I have issued some shares. Okay. That means I have issued some shares. I need to find up, had an update going on, so it got stuck. I'm really sorry. Okay, where were we? Where were we? Let's soon finish. Let's soon wrap it up. We had an opening balance of 38,000 in shares, right? But it increased to 56. So obviously we are issuing shares. Okay. But don't forget, right? Don't forget that entire amount is not being allocated for cash proceeds because we also made some share issue to purchase flour, right? So that let's see how much was that. That let's see. I guess that was question number two. Yes, the share consideration of 9,000. So the difference between these two guys would be your cash issue from shares. Okay. So after this, we are totally done, guys. After this, we are totally done. And because my laptop is getting stuck, right? How much is 47,000, right? But your balance in your 100% accurate SOFP is showing 56,600. So the difference is the one that you all issued through cash. How much is it? 9,600. See, this is the amount you all need to show as proceeds from share issue. But look at these buggers. Look at these buggers. They have only gone and showed 1,500. Right? Let us go and see whether it's a plus or a minus. Highly capable of doing it. Huh? These people. Ah, okay. It's a plus. It's a proceed. Okay, fine. Okay. So what I would do is I would show total of 9,600 was received. But my working is not still complete. Can you see here? I only have 1,500. So I need to add back. I need to add in 8,100. I need to add in 8,100. So that's all that will make 1,500 plus 8,100 is equals to 9,600. This is all that you all need to do in terms of your pre-populated statement of cash flow. Right? This is all you all need to do. And you all can check these answers with your Kaplan or examiner's published answer scheme. Right? If you all have any doubts, just ring me on WhatsApp and I'll be able to help you out. Okay. And if you all have any questions that I need to focus on, let me know. We can finish that also. Okay. It's not all about finishing, guys. It's all about your practicing. It's quality over the quantity, right? As long as your practice to understand, right? Do not try to increase the number of past papers for the just sake of doing it. Okay. Anyways, we'll see in our next class. Thank you for joining in.